Be honest. How much of your yearly gains have you given back in one ugly week? If your strategy only works in an uptrend, you don't have a trading plan. You have a lucky streak. Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go beyond the trade.
Beyond the Trade is for educational entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions.
Well, howdy. How do we do, my good
What's
friend
up?
Acro? Good to
My
talk to
God.
you.
Yeah, it's been crazy. It was a week off last week. Was kind of nice.
Yeah, we put out two, and then had a nice little week off, but right back at it. Sometimes a little break here and there feels good. But today I think we've got a very, very timely topic. I know when you look at the stock market here, we're just looking at SPY. We're only really, the S&P, we're only really down about 2% from all-time highs. So why are people kind of panicking? Just like I said at the beginning, how much of your 2025 or whatever year gains have you given up in one bad week? And I think this is a very good topic for today because I think a lot of people are probably going through the similar thought process that maybe we had a bad week last week or the week before. What are your thoughts?
Yeah, I have to be honest and say that last week was the worst week I had all trading year. I gave back a big chunk of money and was fortunate enough to get just about half of it back on Friday. Um, but I mean, I can't say it caught me off guard, but I think we get to a point where we get very complacent and we've had this long run going. Um, you kind of let your guard down. I know that's what happened to me. And I've been on here, banging the table on sticking to your rules. And what did I do last week? I broke just about every rule I have.
And how does that happen? Because we all get to these points, right? Also,
Mm-hmm.
if for those of you who have not read the book, Trading in the Zone by Mark Douglas is an automatic buy, read it multiple times, and it's one that helps teach you the importance of having rules and sticking to them. So, Acro, regardless of your rules, how do you end up breaking them and how do you try to mitigate that going forward?
It's, I guess some of it is disbelief. You think you know more than the market, or you get, again, I think you get complacent, you get comfortable, and I've been in this position before. You have a bad day, and a lot of times you end up, for whatever reason, you'll double down and maybe go a little heavier, which wasn't my case necessarily, but for me, it was. I've been in a lot more commons than I normally am, and I'm not used to them as much as I am trading options. And with that, by the time you realize, okay, now this position that was up 10% is back to break even. Well, it's what have you been doing for the last year? Buy the dip, right? So you get in a position where you're adding because it's at a level that you had marked. And okay, it goes back up the next day. You're thinking, I was genius. I was the smartest guy in the neighborhood. And then tomorrow hits and it drops two, three times more than it did the day before. And then it doesn't come back right away. And that's what got me in a lot of it. Also, some very long term calls I had that just went completely south. And again, that mentality is, well, they're going to come back. I got plenty of time. And next thing you know, you're looking at it and you're down 40%, which is a no-no for me. And that's what catches me is what I've realized when I stick to that 20-25% rule. If I let it go 40, man, I'm in it for the long haul at that point. For whatever reason, I cannot get myself to make the call to sell it.
Well, that's a very common thing and all too common, unfortunately, is we have our rule that says I'm going to sell it minus 20%, and then you let it get to 40, and you say, okay, well, this thing pretty much has to double for me to get my money back. And
Mm-hmm.
then by that time you've just convinced yourself, you know what, I'm just in this. And that is where you need to realize that you're acting emotionally. Very, very can be very costly, because that 60% that you let just erode while it's going against you, even if you're down 40%, and say your stock gapped down, right? This is a pretty, say you're in calls and it gapped down, you went from plus 10% the day before to minus 40, right? Super, super possible in options. And you don't know what to do. You think, okay, I might as well just ride this out. But oftentimes when you have that feeling, it's just best to sell, right?
Yep.
It's
Yep.
because you have to remember that every single second that you continue to hold an option in particular, you continue to buy that. You can think about comments in that way too. When you continue to hold something, you are basically choosing to buy it. That's one way that I like to think about things.
Yeah.
And just because you're down a certain amount, the stock market doesn't care about how much you're down, and wants you to get back to break even. It has, even though sometimes it seems like it doesn't know your levels, and doesn't know your entry. But that's why it's all the more important to have a very defined risk, and that's where it comes to our
Yeah.
rules.
And we just did an episode, what, 2, 3 weeks ago on trading psychology. You'd think that would be fresh in my mind. No, I broke all them rules.
Well, the thing
I'm,
is,
s-
is everybody says buy the dip until the dip keeps dipping, and then you realize it's a little bit more than a dip.
yeah, I think that's it. We get caught, and it's a trap. We get caught in a trap. As retail investors, we're trading pennies versus guys trading $1 million bills out there.
Yep.
And you can feel it, so it's somewhat of a setup. I don't know that they're come after retail that way or not. It's just the way the market is, and you got to be prepared for all of it. There was a lot of liquidity last week.
And I think that last week was a great example of why you need to see, once you see green, take it. And whenever you don't know where the market is going, whenever well, we never know, but when you feel less certain, when things have, and what I mean by less certain is, say, say SPY has just kind of gone up consistently. I guess you can kind of look back to maybe September and October, the beginning of October, when it was just trending upwards, and each dip was a buy, and there was no really big red candles. Sure, there was a scare in kind of mid October, but that's when you say, okay, the bulls are in control. We are in an uptrend. I'm gonna play buy the dips, right? And then, but whenever you start to see kind of bigger, more volatility, my brain first goes to, okay, we need to, excuse my dog. Whenever you start to see this volatility, these big red candles, right? VIX spiked over 20 last week for the first time in a while. You need to remember, to see green, take green. So if
Mhm.
you're up some 20% on something, even, there's a high possibility that if you hold that overnight, it could open up down 50%, which is just not a good risk management technique at all, right? It's very unwise, and you can't control that. That's one of my biggest rules, and not even a rule, but it's more of a belief. It's true, is that anything can happen in the stock market. I mean, your stock could be up 10% pre-market, and then they'll announce that they're getting sued by, or investigated by the DOJ. I mean, just some of the craziest stuff that I've seen in my own swing positions over time. And you got to just know that anything can happen in the stock market. And so, especially in a time where we've seen uh, SPY is struggling a little bit with trying to break to new highs here, and there's a lot of turmoil, whether it be Michael Burry, or everybody's kind of cluing in on the fact that all the Oracle, CoreWeave, OpenAI money is a little circular, and so at this point, I would say if you see green on a trade, and and you don't want to risk losing that green. Last thing you want to do is let a green trade go red. So
Amen.
important to take stuff off the table right now and not hold things overnight. I can't stress that enough. Whenever you start to feel volatility, don't hold things overnight, and that's a big rule.
We were talking about this a couple weeks ago too, on how much it takes to make back a gain.
Oh yeah.
I've got a image here. Can I share this?
Yeah, you should be able to take over.
Share screen. Which screen? Well, I may have to do it this way. Let's see.
You can just say it. Oh, there you go.
There it is.
Did you take over? Oh wait, I don't see it. There it is.
So,
there it is. Yep.
When you're down 50%, you need 100% gain to get back to break even. This is what I was trying to get across, and I know it doesn't make sense to a lot of people, but
Oh yeah.
the 50% one's an easy one to understand. So let's say you were in a trade that was $100 and you were down 50%. So your trade is now worth $50. Okay, you started at 100. To get back, you have to double your 50, which is 100%. A lot of people go, "Oh no, I just need to get. Just got to get 50%. That's what I lost, and I'm back." No, you're not. You're back at 50% of 50, which is 25. That gets you to $75, not your initial 100. So you got to double up to get back. Mm-hmm. And when you get some of the smaller ones at 30%, you need a 43% change to get back to break even. That's pretty huge.
Yeah, and then you look at minus 20%, and you only need a 25% back. So that's kind of that. I know that's where you kind of draw your line, and when it comes to options, that's where I like to draw my line too. And it's a different strategy when you're playing with commons, but I would say losing 20% on a commons trade is pretty brutal. But in some recently, that's happened, and
yeah,
things have been getting taken to the woodshed, especially if you're in stuff that is a little bit more volatile.
But anyway, I thought that was I saw that chart a couple of years ago.
Yeah, yeah, that's a great chart. I love that
interesting.
chart. Yeah.
But yeah, I don't know. I think the market has changed too. If I look, I've been doing this for, God, I don't know, 30 some years, but I was not really a trader. I was more an investor, so I bought something and sat on it for months, years, whatever. I got into more actively day trading, of course, as a lot of people did during COVID, and fell in love with it. But I see a change, and I think at least on the stocks that we're playing, and some of those that we've talked about, Lay's, for example. That thing moves like a rocket when it moves, and I'm not used to that.
Yeah, unexpected, I would say.
Yeah. And we're all looking for that quick mover, right? We've been doing that for a long time too, but it's not like buying Microsoft, and it has a bad day. Okay, it has a bad day. You can, it's not guaranteed, but you typically know in the next month or two, it's going to be at least back probably to where it was. But some of these, lesser known, smaller stocks that we get into because we have high hopes of big returns, those things move so fast, and sometimes they don't come back.
Right. And so I think that's a great segue into, how do both of us deal with, a big account drawdown? Just like at the beginning, we said, how much of your trade, how much of your yearly gains or what have you given back in 1 week or 1 month? Sometimes it doesn't take very much, because just like you said, you can build an account up, take forever to do it. But if you put go sizably into a position that goes south on you, then you can lose a large amount of that account very quickly. So especially in the time where a lot of us were in some pretty high growth names that everybody thought the sky was the limit, myself included, to some degree. And you have to always consider, once everybody's kind of on one side of the aisle, or thinks, there's only one outcome, which is basically just that it's going to keep going up. You have to start thinking about the other side. I think this also translates to kind of the interest rate environment, it translates to everything in trading.
Yeah.
But
Yeah. Absolutely.
it's the same thing as a couple months ago we had basically a 95% chance based on the market trading interest rate futures that there would be a 25 basis point cut in December, right? And then at this point, the November one hadn't even happened, or the October one hadn't even happened yet. So, first of all, that's a red flag to me because that means that all of the market participants are expecting a certain outcome. And so, anything, even a murmur of the fact that it might not happen, will really stone the market, and it will flood the other direction while people chase. So, to me, I think when you're kind of covered a lot of ground there, but I think one of the main things to do when you have a bad trade or a bad decision in general or series of decisions is to first try to not make it a series of decisions. After you make one bad decision, you're very good at knowing when you made a bad decision. Take a step back. Delete your brokerage apps if you need to. Delete TradingView. Delete Robinhood. Delete everything. This is a personal thing that I do. If I make a bad decision and force myself to be away from it, some people have enough discipline, and but
it'll be there again tomorrow.
It'll be there again, and if you close a trade, say you take a big loss, my number one advice is to just step away from it and try to detox from it.
Yeah. I mean, it's good advice. It's hard to do sometimes. And it's right now you think about it. We're coming back from 40 some days of a government shutdown.
Yep.
Where the data has not been released yet. And some of it, evidently, go figure, has been lost and never retrievable. How does that happen?
Shocking.
It's like, yeah, right. The jobs numbers. I mean, we're never going to know what they were for, October, I guess, at this point. They're going to have to come out with numbers. And think about it, we're going to go 4, 5, 6 reporting sectors that were not reported. What if they come in way off? It's going to have a huge effect on the market. So I guess what I'm getting at there is I would be very cautious because of the new data that's coming out here in the next week or two, that anything that's a big surprise could cause massive swings in the market.
Agreed. And all the more reason to watch your risk. And admittedly,
lock in some profits.
Yeah, admittedly, yeah. I went cash as far as trading and / investing. I'm just holding steady, waiting for the opportunities to present itself, because this is kind of, especially whether you're waiting on what the next move is or whether you've suffered a drawdown, it's honestly important to take that time to sit back and watch. It's that detox. I'm going to keep saying it. I think that's probably the most important thing. And Acro, I want to hear maybe like your top 3 things that you do after having a drawdown or a big mistake. But I would say, number 1, detox. Get away from the screens. Get away from the charts. Get away from X. That's probably your worst thing. And then 2 is to journal. I just journal in my notes app. But I always say, keep track of the mistakes that you make, because oftentimes they become recurring. And then when they become recurring, you make a rule tailored to that recurring behavior. So journal. And then 3rd thing is, in my opinion, cut out all bad noise. Cut out all anything that is noise, whether that's going and unfollowing somebody on X, whether that's deleting it off of your watch list. I think it's important to have a very short-term memory. Quickly forget the past, because you thinking about it literally does not change it.
Yeah, I'm a firm believer in those. And there's many ways to say it, but if you think it's going to happen. If you're sitting there miserable because you lost a lot of money, and that's on your mind, you're thinking about losing money, you're going to probably keep losing money. You got to get into a mindset of, okay, that's gone. I've lost it, and now I'm going to get it back, and here's how I'm going to do it. And you focus. You get laser focused on plays that when you see them developing, that's the one you're jumping on. But if you stay in the mindset of, man, I'm never going to get this, and every trade's going to go down, but let me want to take this trade, probably going to lose money on it because your mind's not there.
A big rule for me, especially, if you've had some bad decisions, is to never try to squeak back a gain, never, or a loss. Never try to squeak back something. Sometimes maybe you say, I lost 1% of my account on that. I think I can get that back real quick with this other play that's kind of moving fast, but you didn't do enough due diligence on. And if you haven't learned about how we do due diligence, go listen to our episode on DD. But never try to squeak back past losses or bad mistakes. And then always just be very careful when you feel emotions arising. And I know that some people may be thinking, if you're just a long-term investor, holder, you have stuff that's really up, you don't know whether to take profit or anything. Listen, I'm not gonna be the person to tell you, hey, sell your Apple from $100 or your NVDA from 95. Like, I don't think that you heard us at the beginning. The S&P's down 2% from highs.
Yeah.
So
I think I looked at that earlier. SPY was like 2.6%.
Yeah. So
from all-time highs.
From that perspective, I know there are some people who maybe have been in these AI related trades, who are looking at significant drawdowns on stuff that they do have up, and maybe you're looking at short-term gains. I know I've had conversations with people saying, hey, I mean, I'm up 100, 200%, yet, down from being up 400-500%, right? But you're still up. But if they were to sell now, it would be short-term gains. And so you have to think, okay, and this is a different decision and different thought process for everyone, but you have to think through the tax situation. Sure, I may be getting taxed 15 to 20% more, but do I think the stock is going down in the meantime? Because if it is, then I can save that percent, right? Only on the gain. So, I could save that percent if the stock continues to go down, because a lot of stuff is down 50% from highs. If you sold even 20% from highs, you made up for that tax decision. So that's you're not locked into something just because it's a short-term or a long-term gain, or just because it's a short-term gain. I think people really need to give more thought into taking short-term gains if they have seen a quick rise in something, like a lot of us have. So if you're looking at a drawdown on an account that you're just holding shares and have been for a while, I would say assess every single position that you have and try to think through, okay, is it worth maybe selling? So you don't have to go fully in or fully out. You can sell a portion. You can just scale a little bit, and you don't have to get rid of the whole thing. So you can kind of cut it both ways. But I think assessing everything in your portfolio right now is probably a smart idea.
We've gotten, I don't know, maybe a little, like I said, complacent. And I'm looking at the SPY daily. The last 2 weeks were brutal. But look at the week before that. I mean, we're right back to where we were.
Absolutely.
Friday was a really good day for SPY. That was the only trade I took on some options that helped me recover half of what I lost the rest of the week for the most part. And I got out early. If I would have stayed in it, I would have regained almost all of what I lost, which is crazy that one options play can do that. But it was, and I'm glad I didn't stay in a way. I mean, I would have loved to have had the money, but it shows me that I'm back to how I normally trade. And I got rid of a lot of the garbage that festers in over time when you're just doing well. Week after week after week of having good weeks, you get sloppy. And I think that's what happened to me. And I was fortunate to get some of it back. But I look at it and it's like, we have some huge gaps there. If you look back on, what day was that? October 23rd.
Oh yeah, and it was filled. Yep.
Right. And then you got the 24th. And
Uh,
then Monday, the 27th. It's like those were some huge moves
yep.
that now I look at that and I go, well, yeah, I would expect a pretty good sized pullback, and we got it twice.
I wouldn't even consider this a pullback.
Yeah, I mean, a
Real,
pullback, I guess, to that Thursday or Friday, to that
yeah.
Thursday,
I mean,
the 23rd.
yeah. Listen, I wholeheartedly agree with you, and it looks like we've supported that level quite a bit. Um, and who knows? So at this point, I'm not in the business, and I don't think you should be in the business of trying to time the top or the bottom. All you need to do is hook a wagon up to the horse that's going in the direction that you can tell it's going and you think it's going, and just ride in that direction and try to get some of that spread. It's not about trying to time the bottom or time the top, because you might find yourself thinking that you're right and staying in something because you have conviction, and
Yeah.
then it just there's no catalyst, right? Whenever the horses are going one way, it's going to take something major for them to go the other way, and that's one thing that I haven't really seen yet. I think the one thing that definitely alarmed me was OpenAI asking the government to guarantee its borrowing or its cost for buying GPUs, which is super alarming. And then it was, CoreWeave's earnings were, obviously saw a struggle dip down into the 70s, which I said it was going to go low 100s or low 120s. Yeah, that's what I said. I was like, oh, okay, try lower. Uh, but when a lot of stuff is also very detached from their EMAs, and by that I mean just the trend. You can look at an RSI and tell the same exact thing, and so something is very clearly oversold in the short term, right? The S&P 500 and individual stocks often tell a different story, and that's because the S&P 500 is weighted towards all of the big names. But you see stuff like this again taken out back. Now,
Yeah.
another huge rule, even though you probably are feeling FOMO, right? After a move happened, or a move went against you, you may quickly want to join that train. Say, oh my gosh, well, CoreWeave is now down 50% in the last 3 weeks, 2 weeks. I'm just going to short it. Okay. Another big rule is never short a hole. Never. That's never short a hole. This is a hole. I wouldn't short it. This looks like a reversal candle. To me, at the very least, it does this and kind of does the same sort of loop down. But I personally think CoreWeave just specific. The bottom is near the height of the fourth day post IPO, which is around 65. So, anyways, very specific use. Very
Yeah, I
specific
had a level
case
there actually
but
that my alert went off at 89.
yep. Did you buy?
I didn't. I don't know why. I mean, I normally would have. I didn't. But at 77, it's awful tempting.
I mean, these are
Not trading advice. Not trading advice.
it's whenever you don't exactly know what's going on. I mean, pretty much anyone right here would predict a dead cat bounce, meaning, no matter how far something drops, no matter how high you drop a cat from, it's still going to bounce, right? That's the dead cat bounce definition. But the same thing here. No matter how far you drop it, it's still going to bounce a little bit. So I expect that here. I think I don't know. But when you see moves like this, it should be eye opening, and remind you to probably take a little bit off the table again to your scaling out of positions. You don't have to be fully in, fully out, but in my eyes, it's a decent time to take things off the table, because when I see all sorts of formerly strong names struggling, and again, that's even though you don't trade them, you should still follow them. And the AI names are again, the biggest companies in the S&P. So I think it's just something to be very aware of.
Yeah, I mean, again, for me on drawdowns like this, I don't. I one thing I mean, you touched on some good ones. The other thing that I would say that you should be considering is size down. If you still want to play the market, stop buying your normals. If you're buying 10 contracts at a time on options, buy 5, buy 3, just until you get back into the feel of what the market's going to be doing. Because it was just so much chaos here the last couple of weeks. It's, size down would be my number one tip.
And even though you may not catch the exact bottom, I know a lot of us, if we're not in the market, we're not actively trading, and we're not actively seeking new positions, and we're just observing, it's somewhat of an antsy position, right? It can be very antsy, and we can have FOMO of, well, the market may go on without me, right? Well,
Yeah.
there will be opportunities there, and you know what? If you sold CoreWeave 4 days ago, you would still have it would still be on sale right here. But
Well, and everybody has been talking for a long time on we need some good consolidation. Well, guess what? You just got 2-3 weeks of pretty good consolidation right now. I would say it's definitely, you're looking at SPY, it's consolidating.
oh,
About 660 to the all-time highs. It's been bouncing in that range now. I mean, my gosh, 660 goes back to early October, even into September. Yeah, about mid-September, it set that 660 level, and that's been a strong level.
and I think it's always worth looking back. Whenever you start to feel, this doesn't feel good, it's always worth looking back and zooming out. Always important to zoom out on the chart and zoom out on yourself and your own growth. If you look back, this run, even though SPY has gone up nearly 50%, more than 50% since, call it end of 2023, you see that there's oftentimes several weeks where it will have kind of a downtrend, right? And we've been spoiled in the since April, really.
Yeah, I don't even remember that February, the big dip there. I mean, it's like I don't remember. I don't remember that. Why?
Liberation Day. But if you look, you look at it, and it looks kind of a lot like the formation of the end of 24, beginning of 25. But the important thing that I want to discuss here is, again, things don't really go in they don't just bottom on one day, or I mean, in this case, yes, but they don't top on one day, they don't bottom on one day. You can see you had plenty of opportunities to get out up here and at the end of 24, beginning of 25, before it started breaking lower, right? So I don't think that, unless there's some big event that happens, that we're going to have a big drawdown in the very near term. But I think that certainly it could just consolidate here, like Acro was saying. And again, when it comes to your trading and your account, if you're just holding things, you're probably not going to see much growth there. And I would keep an eye on each individual one and say, okay, how is this performing? How is it doing relative to previous highs? Say I was in Tesla, and it eventually comes back up to 475 in the next couple of months, and then it fails again. I would start to think that I maybe want to take some chips off the table. But again, if you're just trading and you're in kind of short-term trades, whether it be commons or options, it's important to watch those levels and say, hey, okay, if our key levels on both the market and these stocks that I'm watching, if they're not able to break and we're not really getting much traction, I need to make sure that I'm more focused on range trading, right? I'm not breakout trading whenever we're not breaking highs. right?
Right.
If I'm looking at Tesla, I don't want to buy again until it's low 400s. We may be in a low 400 to 475 range, and I'm just going to trade that range. I'm not buying 460s, 470s when it's proven 4 times that it hasn't broken out. So all that to say is whenever you're in consolidation, it can be really frustrating as a trader.
Yep, that's for sure. I'm glad you
And
brought up Tesla because I like Tesla. I like
uh,
Tesla a lot.
I mean, it is, and actually, we did kind of nail this. I said this was a few weeks ago, several weeks ago. I figured it'd come back down to about 360s, and looks like we might get there. Um, I think,
Now draw your upside trend line from on a daily from like April 9th.
yeah. Go here, turn this off. Go here, April 9th, like this.
Yeah.
Yeah, there you go. That's probably what a lot of people are trading there. Makes total sense, and I think maybe
It's
a
sitting right at it right now, so I mean it's hot on my list.
375, 360 is potentially where we're going to see some dip buying. But again, I want everybody to really think through the fact that things could easily just reject. I mean, it's important to start to chart again the bottom of your past ranges, right? Whenever there's a breakdown below a range, or this is literally a breakdown. Whenever you're looking at this range now, see if I can get my rectangle. Here we go, from here to here, right? This is our range on Tesla, about 410 to about 475. You need to watch whenever it bounces. How does it act around the bottom of that range? Because it very well may just keel over. Fail, 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 or what you don't want is an upper wick showing the quick selling pressure, and then coming back down and closing outside of the zone. That probably means you're headed lower. So very possible that there's some dead cat balances here. I expect some. I just think it's quite alarming that a lot of things have broken outside of their ranges. We need to see how they perform when they get back into ranges. We want to see a strong close. We want to see continued bull momentum back into these ranges, and hopefully that will provide new bottoms and new support.
Right on. What's your thoughts on NVIDIA these last weeks or
Yeah,
two?
it's kind of tough to tell. I like Nvidia. Obviously, I'm bullish on it. Um, Earnings this upcoming Wednesday is a potential catalyst for the whole market, and
Yeah.
it's kind of the world we've come to now. Is earnings for the big names are almost as much of a catalyst for the market as an FOMC meeting. So what's important here is if Nvidia goes, I mean, if Nvidia has great earnings, then they could easily squeeze the market much higher because there are a lot of bears who have entered the chat in these last couple of weeks, not feeling good about the AI trade as a whole. But I could 100%, again, back to that short memory, right? That short term memory. I could easily see us just forgetting about all of this bear stuff and then just racing higher because the stock market is just a continual squeeze of emotions and it really shorts. So whenever, and Nvidia is the prime example of it, if Nvidia were to gap up near the 200s, it's just going to keep going and it's going to cause SPY, because this is the biggest company in the market. It's going to, if SPY gaps up, several dollars off of the Nvidia earnings, which it very well could because all the other stocks are going to move with it, that could just set off the next squeeze, and then false alarm, everybody, we're all good, which happens all the time. And if you go back in the chart, you can think through, Oh, well, what was this one? Okay, I think this one was when we everybody was scared about the 10-year being too high. And then, one of these was Meta's earnings, I think was this one. And I don't know if everybody remembers events even for these small ones, but I oftentimes do. This one was when Jerome Powell said we're probably actually going to keep rates higher for longer, like we always said. And then the Russell 2000 did an absolutely nutso candle right here. Yeah, right here, minus 4.5%. And then what happened? You fell down, you came back up to the bottom of your previous range, and then it rejected it multiple times, not one singular top, multiple times, and then broke off. So eh, everything we're saying here applies to whether it's bull, bear, whatever.
Yeah, doesn't matter which way it's going.
But
It works both ways.
there's so many similarities, I would say, between this chart and what I honestly, it's the same exact levels, if I'm being completely honest. I mean, you could see maybe a Russell 2000 of 20, or what is this one, IWM of 225. Very, very possible. You look at the volume profile, it's in no man's land, all the way down to 225. So that's why I fear.
Yep.
Maybe it's an intermediate term little dip, and honestly, I would consider that healthy.
I saw a lot of squawk this past week on X with people that were struggling, and I hope you get something from this anyway. That it happens. You're not going to be right every day. If you're trading every day, you've got your good days and your bad days, and we're unfortunate that if you are a strong bull, you had a rough couple of weeks. You have to adapt. You have to have adaptability.
And yeah,
And if you don't want to play the downside, then just don't trade those days. Get your account back to cash and wait for it to go through. If you only want to play the bull side, that's fine. There's nothing wrong with that. People say, "Oh, you're missing out on opportunity." Well, if you're not comfortable with it, then get out.
or if you even feel so much as uncertain, getting out and staying out is often the best remedy. And I like to tell people, who ask, okay, when can you tell the exact entry that you want to take? And my response is sometimes when the market basically begs you to. Those are the best ones. For example, all this Liberation Day stuff, that was a begging moment, right? And that was sometime, and it wasn't clear at this point. It wasn't clear, still uncertain and unclear. At these points, when were we going to have that catalyst? But you see this candle with all this volume, that was when it was, and then a small, kind of lower volume pullback. That's how you knew. So, and of course, everything is 2020 in hindsight. It's very important to not beat yourself up. Make sure you zoom out on yourself. Think about how far you've come, how much you've grown, and everything you've learned while trading, and realize that one trade doesn't define you. One bad trade, one bad decision doesn't make you a bad trader, and it doesn't mean that you didn't think about it right. Something didn't work out, obviously, and that's where you should, again, detox, take time away, journal, and then just zoom out on yourself, zoom out on the charts, and tune out all of the noise. Here to cut through the noise.
That's it. Well, I think we beat that horse to death.
Right.
You know what it's time for?
It's time for
Sunday Bangers.
Sunday Bangers. What's up? We're in the building for Sunday Bangers. We need to get the soundboard really hooked up. We'll figure it out.
I'm working on it.
We've got some time. Okay. This is probably one that nobody has really talked about. Obviously, the last couple of Sunday Bangers have struggled. When the whole market goes down, everything kind of goes down. But a sector that I don't think anybody's talking about. I saw an interesting tweet or a video of Elon Musk talking about how he thinks we are going to need a ton of solar in space to power everything. I know. Listen, I promise you, I have been digging into the solar charts this weekend, and I love them. So TAN, TAN, if you just want something that's a little bit more risk friendly, is your solar ETF, right? My idea here is even though solar might not be perfect right now, the technology is something that we will need. We're gonna, the grid is gonna be fully stressed. I mean, you're gonna be resulting to natural gas. You're gonna be resulting to wind, solar, all of that. Even though solar is probably the best out of all the other alternatives, we're gonna need solar. Yeah, right. Power, the desire and the need for power is not going anywhere. So
It's funny you
there's
bring that up, 'cause I was so hot on FSLR. I go all the way
First
back looking at
solar.
my charts to
Yep.
22 when I put it on my list, and I was just kind of waiting. And I may have bought some shares at one time. I don't recall now, but back then it was trading at $130.
Yep. And so you see these solar stocks are trading up. Another one, NXT, Next Track, Next. They actually call themselves Next Power now. I guess they just changed their name. But this one is a big solar stock. You see, closed up 7%. I would watch NXT. I would watch SEDG is one that I like. Solar Edge Technologies. I know. Got pretty
Wow.
crazy up in 2021. That's why I turned my logarithmic chart on. Boom, I can actually see the patterns. SEDG, and then SHLS is another one. But again, NXT is a big name. It's only a $14 billion company, even though it's a $94 stock. Keep an eye on this one. This one is probably going to be a winner. FSLR obviously has looked nice, but yeah, big on NXT. I like it.
Wow, you heard it here, folks. First, folks, solar.
Solar. We're watching it. You have any Sunday bangers, Mike?
The one that I'm really interested in this week, and this is a weird one, Boeing.
Oh, your favorite.
Again, I like it because of the way the contracts move,
Yep.
and you got to watch the spread. It will have somewhat of a spread. Could be 5 cents, could be 25 cents. Sometimes you just got to get in at the right moment. Just watch the spreads on it. But this one goes back to some really good levels at the first of the year. It's like 197 area,
Yep. 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 Yep.
and it broke through that, but it's been bouncing off of it for a week straight.
Yeah, I like this as a
And
support buy.
yeah, this is. I mean, I if you're not comfortable with it, buy one contract or what have you. I usually buy. I don't usually buy these too far out. I'll buy a couple of weeks out, maybe. And if it doesn't work out, get out. I mean, it moves fast. The thing that scares me with Boeing, it takes one thing to go wrong with an airplane, and the stock just whether it's their fault or not. Even if it's not a Boeing plane, they get hit hard when there's plane quote unquote information that comes out or news. But yeah,
Okay.
I bought some of this back during COVID and made a killing on it.
Nice.
But I mean, you get
Nice.
back
Yeah.
Boeing under $100, during COVID was ridiculous.
Yeah. Yeah.
But
No joke.
it's really it never got back to where it was though.
Yeah.
It's still a under player there. So I don't know. I like Boeing. Be cautious if you're gonna just watch it. Watch it to break that level there. I've got it marked at like 197.
Yep. Yeah.
But
It's
yeah,
gonna.
other than that, I'm always interested in Tesla, up or down. I'm a little unsure right now. I like that trend line that we drew earlier, and
Yeah.
it's sitting right at it. So I think tomorrow will be what makes me decide if I like Tesla long or short. Because if it goes short, it's going back down to 337.
Yep. At least 370. Probably maybe 350s, but that would be a pretty precise one.
Yeah.
But yeah.
Yeah, you got a big level there around 357 to 360.
Yep. 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 Should struggle to break lower than that, but we'll see. It's actually in Elon's buying zone. this day right here, Friday, September 12th, was the day that Elon bought all of the stocks. uh, and it just went straight up. So so we'll see. Keep that zone on watch. That's one that I would probably
Yeah.
chart too.
I'm a little hesitant on bangers this week after what we've gone through, and now that the government's back open, I think we need to, again, what we talked about earlier, we need to watch for the data coming out this week.
Absolutely. And to,
and I'm
yeah, I
not
think
even-
the banger is patience.
Yeah, there you go. There you go.
All right, well, that'll do it for us today. Thank you all for tuning in. And Mike, thank you for chatting with me.
Yeah, buddy, enjoyed it. Good to be back.
Yeah. Have
Let's
a great
go make
week,
some money
everybody.
this week.
Woohoo. Woo. Patience. Let's go.
Later.